Finally, 4,000. The NASDAQ closes above that landmark level for the first time. And the Dow hits a new high as well, now targeting 11,500. Good evening, I'm Paul Kangas in Miami.
And I'm Susie Garib on the floor of the New York Stock Exchange. The hot topic here today was about the red-hot rally in Qualcomm. The stock sizzled more than 150 points. Then what a difference 10 decades have made on Wall Street. We'll look back at a century of change in the nation's financial markets.
Nightly Business Report is brought to you by Compaq, makers of compact non-stop e-business solutions for companies who know that the online world never stops, so their information systems can't stop either. Franklin Templeton, serving investors for over 50 years. Franklin Templeton and Mutual Series, investment products distributed by investment professionals. The financial consultants of A.G. Edwards, committed to making investors comfortable with their investments, with their futures. A.G. Edwards, be comfortable. And is produced in association with Bridge, the global financial information company, providing real-time and historical market data, analysis, and news.
Good evening, everyone. It's not New Year's yet, but Wall Street is already popping open the champagne. Here at the New York Stock Exchange, the Dow posted its 34th record for the year, and the NASDAQ finally closed above 4,000. Now it can boast a gain of 84% and the best performance of any stock index in U.S. history. Well, that run has investors betting on the NASDAQ's future. Diane Estabrook reports.
This week, the holidays helped slow a month of frantic trading in the NASDAQ 100 pit at the Chicago Board Options Exchange. But average daily trading volume for the NASDAQ 100 contract is still up more than 160% over last December. Traders say many investors believe the tech-heavy NASDAQ 100 has reached such a stratospheric level, it is due for a correction. So they are buying put options, which will let them sell the index and make money if it moves down.
There's so much money invested in technology funds that the NASDAQ 100 is a great vehicle for them to give a hedge to their portfolio risk.
But across town at the Chicago Mercantile Exchange, some traders think a different kind of psychology is motivating investors to buy NASDAQ 100 futures.
I think people are still looking for exposure. A lot of the technology trading has been a momentum game. And as long as the momentum continues to work on the upside, you'll see people coming in every day buying these stocks.
The lofty gains of tech companies are the reason the NASDAQ 100 has outperformed the NASDAQ Composite Index, the Dow Jones Industrial Average, and the S&P 500 Index this year. But some market strategists say the NASDAQ cool be ready for a cool down.
The stocks are going up based on internet. Internet is a business model. So from that perspective, it is a growth industry. However, we are paying for stocks for year 2005 earnings or year 2003 earnings. That is the bubble part that may burst, but not to take those stocks down to stay down.
Many traders agree the NASDAQ 100 is poised for a correction or a pullback sometime soon, and they believe that pullback could come within the next few months. Diane Estabrook, Nightly Business Report, Chicago.
Led by a 50-point surge at the outset of trading by the blue chip Dow Industrial Average, which was following through on yesterday's 85-point run up to a record high, the NASDAQ index posted a 50-point gain by 10 a.m. this morning, putting it at the 4,022 level. The early rally was partly due to the report that the index of leading economic indicators rose 0.3% in November to a new 40-year high. This suggested that the economy's expansion will continue well into the new year and help bolster corporate profits. By 11 a.m. then, the industrial average was sporting a 60-point gain, while the NASDAQ index was still up 50 points, both easily in record-high ground. That upward spike finally invited several hours of profit-taking, but as trading dwindled, the bond market firmed up, and Qualcomm led a big NASDAQ rally. The Dow Jones Industrial Average wiped out a small mid-afternoon loss and closed up 7.95 points at 11,484.66, a record high for the second day running. In today's 117-point range, the Dow closed down 58.5 points from the best level of the session and up 59 points from the low, right in the middle. The NASDAQ Composite surged 69.35 points at 4,041.46, yet another new high for the year, the 60th, and of course a new milestone. Big board volume today, 574.3 million shares, getting less and less as we approach the weekend, and well down from yesterday, but a lot more up volume than down volume, almost a 3-to-1 margin. The Dow Transport Index was down 2.5 points, utilities off 1.41. The closing tick, however, was decidedly bullish at plus 533. Standard & Poor's 500 at a record high, as indicated by the asterisk, up 5.80. The 100 fell just over a point, but the mid-cap 400 at a record with that gain of 5.5 points. Bridge Futures Price Index was up exactly 1 point. New York Stock Exchange Composite gained nearly 1.75 points. Value line rising 5.03. Russell 2000 small cap at a record with that gain of 8.53, as was the Wilshire 5000 at a record with that gain of nearly 82 points. The bond market got a boost today as the Federal Reserve flooded the financial system with liquidity just ahead of Y2K. This easily overshadowed that rise in the leading indicators, and also helping was a decline in oil futures. As a result, tax-free and corporate issues closed up about an 8-point on average, and treasuries ended higher across the board, 5-year notes rising 3/32, a 7/32 rise in the 10-year note, and the 30-year Treasury bond up 14/32 with the yield down to 6.45%, and the Lehman Brothers long-term Treasury bond index rose almost 5 points. I'll be back shortly to show you where the action was on Wall Street today, Susie.
Paul, as you said, it was another great day for tech stocks, especially Qualcomm. It skyrocketed 30%. The questions investors are asking now, is it too late to invest in tech stocks? And where else should they put their money in the new year? Erica Miller got some answers.
The NASDAQ has been on the attack. But if you've missed out on all the fireworks in tech stocks, is it wise to put new money into the sector? JP Morgan's market strategist says no.
We would wait. Our view is at some point in the spring or summer, you'll get what we call a more attractive entry point. We think you'll be able to buy a lot of very high quality tech stocks at a lower price than you can get them right now.
For investors who are anxious to put their money to work now, Kliggett recommends buying energy stocks like Royal Dutch, Enron, and Anadarko Petroleum. He also likes big industrial companies like John Deere and DuPont, as well as consumer giants like Pepsi and Colgate. Strategist Gail Dudak is also cautious. She is recommending healthcare and biotech stocks.
Well, I think one of the most bullish signs about healthcare for an investor is that as the baby boomers age, you're going to need more from healthcare. I think the growth potential here is terrific.
Her top picks are Johnson & Johnson, Genentech, and Teva Pharmaceuticals. There are still plenty of Wall Street strategists who are upbeat on tech stocks. The bulls are predicting the NASDAQ will rally double digits again next year and outperform most major market indexes. Erica Miller, Nightly Business Report, New York.
Well, no matter what investors do with their portfolios in year 2000, there's no question that the way Americans handle their money has changed dramatically in the past 100 years. The combination of government regulation and financial innovation has profoundly transformed the world of finance. In tonight's Countdown to Business 2000, Suzanne Pratt traces the significant financial developments of the 20th century.
It was a new beginning for America, and almost overnight, this young nation had become the world's largest economy. John Pierpont Morgan was the dominant financier of the time, and in 1907, he and the U.S. were caught in a major financial crisis, with runs on even the biggest New York banks and a crash on Wall Street.
The Panic of 1907 marked the end of the tolerance for instability at a national level in the United States.
The 1907 debacle pushed the U.S. toward a central bank system, and in 1913, President Wilson signed the Federal Reserve Act. By the 1920s, the Great War was over, Wall Street was booming, and Americans were celebrating. But the party ended abruptly with a stock market crash in 1929. By the early 30s, a quarter of the workforce was unemployed. Thousands of banks failed, and a new president was battling the Great Depression.
Brother, can you spare a dime?
That bleak period in American history resulted in major financial reforms. FDR's first 100 days brought the Glass-Steagall Banking Act, which created deposit insurance and separated commercial and investment banking. And in 1934, Congress passed the Securities Act, which required companies to divulge financial information. It also created the Securities and Exchange Commission.
Wall Street didn't like the regulation when it came in, but when it's seen how the regulations, disclosure it's called, disclosure of information, how it's improved their business, now, having hated it in the 1930s, now they say it's the best thing that ever happened to us.
Prosperity returned to the U.S. in the fabulous 50s. Regulations from the 30s made the market safer, and in 1954, the Dow finally broke past its 1929 high and just kept going. But in the early 70s, the bubble burst. Vietnam War spending and the Arab oil embargo devastated the economy. Inflation surged, interest rates skyrocketed, and stocks went into a tailspin. Amid the uncertainty, many new financial products were created, from money market funds to derivatives. The 80s saw the emergence of the mega deal. Michael Milken pioneered junk bonds, which financed high-risk, high-growth companies, as well as takeovers. When the stock market crashed in October of '87, the Dow's 23% plunge was unprecedented. But there were few repercussions in the economy, and the market soon resumed its upward climb. In the last decade, investors' appetite for stocks has been relentless. The Dow has surged 8,000 points, and nearly half of U.S. households now own equities.
Low cost, professional management, diversification, it's a wonderful invention, particularly for people who want to put relatively small amounts of money every month, every quarter, every year, and look at it 10, 20, 30 years down the road.
You've got mail.
The internet has also given individual investors easy access to financial information and tools that were once available only to professionals. 100 years ago, London was the world's financial capital, but thanks to a maze of government regulations and a long list of financial innovations, Wall Street is now considered the world's dominant and most stable marketplace. Suzanne Pratt, Nightly Business Report, New York.
And coming up, my interview with Charles Schwab, one of the pioneers in opening the doors of the financial world for the average American investor.
The Bulls had the run of the road on Wall Street today, and a lot of records, as we've already noted, the Dow being one of them, up 7.95, second day in a row at a record high, and the advanced decline ratio, the best we've seen it in a long time, almost 2-to-1. Still, only 95 new highs for the year against 255 new lows. America Online topped the active list on only 7.9 million shares, up 1 point though. Philip Morris gained 1 1/4, rebounding from recent weakness. Tyco International, same story there, up 1 9/64. Compaq Computer fell 3/8. Agilent Technologies up 7 9/16. The Wall Street Strategies market letter made some very positive comments about Agilent, forecasting the stock in the near term should get to $100 a share. Charles Schwab up 5 7/8. The company said it expects to beat fourth quarter Wall Street earnings estimates of 17 cents by 2 to 3 cents. And as we noted earlier, we're going to have an interview with the CEO shortly. Cendant up 1 11/16. HealthSouth gained 5/8, and AT&T moving up 9/32, 10th in volume, with Xerox with a 1/4 point gain. American Express among widely held issues up 3 3/4. That was the biggest point gainer in the Dow Industrial Average. Analog Devices doing well, up over 5 points after Bank of America increased its price target for the stock from $100 to $150 a share. Coca-Cola Enterprises rose 1/2. Lehman Brothers Brokerage repeated a buy and increased earnings estimates. Johnson & Johnson down 2 15/16. That was the biggest point loser in the Dow Industrial Average today. Sony up another 13 7/8. On Monday, the company announced a 2-for-1 split, and it closed at $254 a share then. And finally, Walmart, one of the weaker components in the Dow, off 2 3/8 on some profit taking. Jenny Craig, the star of the day on the upside percentage-wise. Apparently a positive reaction to news that Monica Lewinsky will be the Diet Company's media spokeswoman. She claims to have lost 31 pounds on the company's diet plan. biggest percentage gainer of the day. China Tire Holdings up 2 7/16. This firm is suing Goodyear Tire, alleging deceptive and libelous trade practices regarding Goodyear's joint venture in China. TD Waterhouse Securities, just like Schwab, riding on the apron strings there, up 1 13/16. And Bayview Capital, the big percentage loser, off 1 3/4 after the company said it sees lower than expected fourth quarter earnings of 17 to 21 cents due to the dilutive impact of the acquisition of Franchise Mortgage Acceptance Company. CGI Group down 5 points. That's just plain old profit taking. That stock was only $30 a share on December 20th when it announced a 2-for-1 stock split. Same story with Vimple Communications, which has been strong recently after the company said its capitalization reached $1 billion. NASDAQ trading the 60th record high of the year with that 69 1/3 point gain. Volume down 79 million shares from yesterday. 24 stocks up for every 18 down roughly. Qualcomm topped the active list, up $156 a share. PaineWebber issued a buy recommendation and predicted Qualcomm will reach $1,000 a share in the year 2000. Commerce One on profit taking down just over 40. Yahoo gained 13 7/16. Microsoft up 7/16. CMGI did well, rising 7 3/4. Cisco System edged up nearly a point. Juniper Networks down almost 9. JDS Uniphase up almost 15. Internet Capital down 11 5/8. And Intel was up 7/8 in dollar volume. USABankshare.com up 5.5 points. The company's going to launch a new website focusing on business-to-business e-commerce. Intraware up 21.5. Bank America Brokerage issued a buy with a price target of $86 a share for that stock. And Egghead.com up 4 5/16. The company said Mediametrics ranked it number 10 in its list of top e-commerce sites the week of December 19th. The Amex Composite Index had a record with that 9 1/3 point gain. Look at this gain. Storage Computer up 2.5 points. It's a software designer for storage solutions. Company didn't return our call. No news on the wires, but easily the biggest percentage gainer on the curve. And then InterDigital Communications up 14 7/16. It has some hot wireless technology, and its stock's been very strong now that it plans to expand in Japan. In an after-hours trading, the stock was at 51 after several analysts referred to IDC as a baby Qualcomm. Finally, the index shares, the only loser, the Diamonds Trust, good gains in NASDAQ 100 and the depository receipts. That's the Wall Street wrap-up, Susie.
Paul, back now to our special look at the 20th century. One person who pushed Wall Street and Main Street closer together in this century was Charles Schwab. He pioneered the concept of discount brokerage. In tonight's Countdown to Business 2000, my interview with Charles Schwab. I began by asking him about the enormous changes in the way Americans invest their money.
Well, there weren't any choices. It was as simple as that. We had the old banks, the old brokers, the old insurance companies, and there was one way to do it. They were highly regulated, big overhead costs, big commissions involved in these things, and there was, for instance, the banks, you could go to a bank between 10 and 3 o'clock, 5 days a week. Well, guess what happened? About 1981, Schwab opened up 24 hours, 7 days a week. That seemed like a interesting notion, but we got huge wave of new customers because of expanding to customer hours.
Well, now we're in a new era. Average investors have a lot of the same information as the professionals. They're more rapidly informed. How much more do you think that this is going to evolve to make it even easier to invest and trade?
Well, as the development of the internet unfolds, and it's just in its early stages now, you're going to have more opportunities for more information flow. There can be more visuals available, along with the statistical kinds of things, more audio kinds of, so you'll be able to hear a more full-fledged kind of experience about investing. And so as we move forward in time, it's all this information is coming. It's going to make you more comfortable, a better investor, a more informed investor, lower costs for you, more access. It goes on and on and on.
I think most people would agree that it goes against human nature to be conservative when the markets are going up and to be optimistic when the markets are going down. But what impact do you think that there will be on Americans' attitudes towards investing if the bull market hits the skids?
The human nature aspect will always remain there within ourselves. Let me tell you, when the market is down, I am not very happy. I can get pretty grumpy. But I understand that about my personal emotions. As when the market is up and I get exuberant about things, I get pretty excited too, like everybody else. But it's all about having confidence in your program, a confidence in what you see about the future. If you don't see optimism in the future and growth in the future, investing is probably not for you.
Mr. Schwab, your firm has been one of the savviest when it comes to technological innovations for investing. Looking 10 years from now, 20 years from now, what are some of the things that our investors are going to be able to do that they can't do now?
You'll see the integration, further integration of banking and brokerage all come together, and it'll be supported by the ability of internet. So our thinking about the future is we want to make sure that in a moment you can talk to the human being if you need to. The next moment you can do everything you want to on internet. But you need to have both choices to be successful.
Thank you very much, Mr. Schwab.
Thank you. Thank you, Susie.
Tomorrow, a media mogul looks at the future. We sit down with Time Warner's Gerald Levin.
In the Money File tonight, some thoughts on how technology has changed our lives. Here's Terry Savage, author of The Savage Truth of Money. The moment of truth is coming, that Cinderella hour of midnight when we move into the year 2000. Will our technology coach turn into a pumpkin as the clock chimes 12? Surely whatever glitches arise in the world's computer systems will be quickly found and fixed. But on a more profound basis, it makes us realize that, like it or not, technology sweeps us all along. Will you be caught in the undertow or ride the crest of the wave? Well, the crest of any wave is a frothy place, as the prices of tech stocks remind us almost every day. But I'm not just talking about investing in technology. The real challenge to each of us is to take advantage of technology in our personal lives. You know, it's ironic. The more successful you've been at doing things the traditional way, the less incentive to change. How many corporate CEOs either don't have email or, just as bad, have their secretaries sort their messages and then print them out for the boss to read? Similarly, how many adults marvel at the way their children surf the net, but then throw up their hands at learning how to bank online? The big economic divide in the 21st century between the haves and the have-nots is likely to be the opportunity gap that arises between those who use technology and those who remain rooted in the past. So make it your New Year's resolution. Use one new technology technique every week. Get email, bank online, track your investments, do financial planning, buy a mutual fund over the net. Now those are resolutions worth keeping. I'm Terry Savage.
Recapping today's market action, records everywhere. The Dow gained almost 8 points to a new high, and the NASDAQ index up 69, closing above 4,000 for the first time. And please join us at our worldwide website, NBR.com, or on America Online, keyword NBR.
And that's Nightly Business Report for Wednesday, December 29th. I'm Susie Garib. Good night, everyone. And good night to you, Paul.
Good night, Susie. I'm Paul Kangas, wishing all of you the best of goodbyes.
Nightly Business Report is produced in association with Bridge, the global financial information company providing real-time and historical market data, analysis, and news. And is made possible by the financial consultants of A.G. Edwards, committed to making investors comfortable with their investments, with their futures. A.G. Edwards. Be comfortable. Franklin Templeton, serving investors for over 50 years. Franklin Templeton and Mutual Series. Investment products distributed by investment professionals. Compaq, makers of compact non-stop e-business solutions for companies who know that the online world never stops, so their information systems can't stop either. And by the financial support of viewers like you.
Join us Friday on OPB Radio for All Things Considered and Lost and Found Sound. We'll have an exploration of time to wrap up the year and the century. All Things Considered at 5 o'clock Friday on OPB Radio.
Wall Street can be a confusing place, so if you're new to stocks or bonds, be sure to see the updated version of NBR's classic home video, How Wall Street Works. To order by credit card, call 1-800-535-5864.
Funding for local broadcast of the Nightly Business Report has been provided by viewers like you and by the following. The Collins Foundation. The Collins Foundation is dedicated to improving the quality of life in Oregon.
Wells Fargo, proud to support our communities with quality family programming.
The companies of CNF Transportation, Emory Worldwide, Conway Transportation Services, and Menlo Logistics. CNF Transportation, where ideas carry weight.
The Metropolitan Opera brings you The Marriage of Figaro. Join us for Mozart's radiant comedy performed by an all-star cast, including Bryn Terrell, Cecilia Bartoli, Suzanne Menser, Dwayne Croft, Renee Fleming. Conducted by James Levine.
On OPB, tonight at 8. Corporate members Young and Rohr Group, Hilton Portland, and Volvo Cars of North America have made a major contribution to the Oregon Public Broadcasting Program Fund for Excellence. Additional funding has been provided by you, the contributing members of OPB.
Well, our forecast update tonight as we head out to western portions of the state. Clouds coast, partly cloudy inland, some fog and low clouds, 30s and 40s coast, 20s and 30s interior. As we head out through tomorrow, we're going to look for sunny to partly cloudy skies most of the state. We're going to see forecast mostly cloudy to sunny. As you head out to the west, we're going to see variable clouds east as well.
Charles and Caroline Swindells have made a significant commitment to the future of Oregon Public Broadcasting. We thank them for bringing a world of learning to all of our listeners.